one dynamic coming out of the second quarter prints has been reacceleration in revenue in some of these names. Is that the most important thing right now?
Yeah, I think it is the most important thing. I mean, to see all 5 of the major online ad platforms show accelerating revenue growth tells you something bigger is going on. And this is coming amid all of this uncertainty, right? We've had a lot of concerns about brand safety, about antitrust, lots of reasons for advertisers to pull back on that front, and to see this actually accelerate and go the other way, I think tells you something about the power of those platforms.
You cover Amazon, you cover eBay. Just looking at e-commerce, Target digital sales were up 34%. Walmart U.S. e-commerce was up 37%. Shopify total revenue was up 48%. Meanwhile, Amazon's doing stuff. They're in one-day shipping. Long term, are we going to look back at this period as a significant sea change in what's happening in e-commerce or no?
Yeah, I think this is another step on the path, right? We've seen these kind of things before where you get ebbs and flows, and obviously you've got a relatively strong underlying consumer that's driving a lot of this. Amazon's retail growth accelerated in the U.S. in the second quarter, driven a lot by that one-day shipping that they put into place. So I don't know if I would say sea change any more so than the last 10 years have been a big part of that sea change.
Going back to online advertising growth in the second quarter and the fact that it wasn't just sort of the entrenched giants, Facebook and Alphabet, that saw the growth accelerate as quickly as you just pointed out. How does that fit into these broader antitrust regulatory scrutiny discussions that we're seeing right now in general? I mean, when you look at these numbers, do you see that there is actually more competition out there than maybe is being discussed?
Yeah, I think that's exactly what the big tech platforms want people to see in this, right? They want to see that there are companies out there that are growing successful. In 2 out of the 3 of those cases, actually growing faster than Facebook and Google are growing. Every one of those companies that you talked about on the e-commerce side of things growing faster than Amazon is. So for them to be able to turn to DC and say, look, how can we be a monopoly if Walmart's 4 times bigger than we are and they're growing faster than we are in e-commerce? And so that's going to be, I think, a lot of the defense that you see. Now, whether or not that's enough to carry weight with DC is a whole other question.
I was going to ask, lately, comments out of Del Rahim, obviously the FTC, all these state AGs. What's the most concerning thing you've heard regarding policy risk?
Well, I think it's all of that in aggregate, right? It's the fact that you're hearing this from so many different people. If you had a single point of presence in terms of policy here, that's something that these companies could deal with. But if they're dealing with 50 AGs, if they're dealing with dozens of different federal agencies that are looking into this, and then multiply that for every single country out there, you look at what's going on in France right now in terms of the digital taxes that they're dealing with, that's a nightmare scenario for these companies just in terms of being able to manage this. And I think that's the real risk. It's not that any one of these is necessarily going to be a big problem. It's what it all means together.
But it's not enough to get you to change your ratings on any of these?
No, because at the end of the day, it hasn't done anything to change our behavior, right? We, the consumers, are all around us. We're still using these platforms. We're still engaged with them. We're still using Facebook. We're still using Amazon. Until you change the underlying consumer behavior, that's what matters to us as analysts. It's what matters to these companies as far as their financials go.
Let's talk about content a little bit. You cover Netflix. Which matters more to Netflix in the streaming game as we get toward the end of the year? Apple TV Plus or Disney Plus?
Well, I think certainly Disney Plus is going to matter more just because it's the bigger of the 2 platforms. You've got a lot more content there in terms of what Netflix is going to have to deal with. But I think actually what matters more to all 3 of those is the other 80% plus of consumers' time that's still being spent on cable, on broadcast, on all of the video consumption that's happening outside of these ecosystems. It's not about Netflix versus Disney. It's about Netflix, Disney, Amazon Prime, CBS All Access versus the ad-supported ecosystem that consumers are increasingly figuring out. 22 minutes an hour worth of advertisements, probably really not a great trade-off for me. Not when I can go out and spend $7.99 or $8.99 to opt out of that.
You did a deep dive on IPO activity and how this recent round of companies that have gone public have fared versus, I guess, historical norms. What is your takeaway from that, and how does it apply to some of the big names, the big tech unicorns that we haven't even seen come public yet.
Yeah, so I mean, what we've seen so far, and you've seen this in the most recent deals done at that scale with Uber and Lyft, is a lot of that value creation is happening outside of the public markets. No surprise. We all know this. We've talked about it a lot over the last few years. Increasingly, that's showing up in the performance of these stocks after they go public. You look at the performance of Uber and Lyft just as examples, but really sort of there are lots of others out there. It just means investors have to be more selective. Bidding up everything into in the private markets and then expecting that there's still upside in the public markets as well. It's certainly going to work for some of these companies that have that kind of growth path in front of them, but you can't just take it on blind faith.
Reports that Alibaba is going to delay this Hong Kong listing, try again in October. How much of either unrest in Hong Kong specifically or general global anxiety is going to affect the way they raise capital?
Well, I think you look at what's going on in China broadly, and the venture capital market's sort of a good gauge for the day-to-day of this. We saw venture capital funding in China down 77% year over year in Q2. It's just a flag on the kind of uncertainty that's being created at different levels that's impacting those kind of day-to-day decisions like Alibaba had.